Good afternoon. This is Brad Dennis with BIS Commodities with your weekly roundup for the last week of March, first day of April. So, end of the quarter, and the influences this week basically have been Fed speak out of Chairman Yellen and our quarterly stocks report that we saw yesterday in the grains. So to start off on the macro side, earlier in the week, Fed President Yellen basically came out and her remarks were taken as dovish, which gave a green light to buy stocks, and we saw the stock market rally over the past few days, and actually we're ending the quarter, or ended the quarter yesterday, basically unchanged. So we're right back to those December 30th levels. The green light meaning that, hey, we're not seeing anything in the economy that is repairing itself quickly enough that needs us to raise rates. So the whole rate issue is going again. Now, a lot of Fed governors had come out before her and talked about, hey, let's get this program going. So there was a very big hawkish spin until she talked this week, and that kind of reversed things a little bit and said that there's going to be pretty much easy money out there for a while. Non-farm payrolls came in today. They were looking for 210,000, came in at 215, so not out of line. The participation rate was higher in the non-farm payrolls, which is definitely a positive up there, but you're still looking at a market that bad news says actually we need to rally because that keeps policy the same. Good news is kind of bad because we don't want to have a tightening policy out there to give us a credit crunch or anything. So that was basically the equity markets. Moving over to the energy markets, all of a sudden we're seeing the OPEC nations not on the same page again. So the big to-do was, hey, we're down at these levels on price. Let's get these OPEC nations together. We're going to freeze output based on our January output. Hopefully that'll stop prices from sliding. Well, we got up to a certain level, and now you're hearing that Saudis aren't going to do any kind of freeze because Iran's not going to do it. Basically, all these countries for them to agree on anything is very optimistic, and so we're seeing that rhetoric out of OPEC continue to go back and forth. And bottom line is demand is still outstripping supply. So you still have more crude than you know what to do with it, and we continue to build our inventories. And so that's the fundamentals of the market. And yeah, there can be all this geopolitical speak, just like in the equities market. There can be all this OPEC speak in the energy markets, but when the fundamentals come out, we're oversupplied right there. So moving on then to the livestock markets, fairly calm in the hog markets, pretty much staying in line on those Aprils. You're sitting 70 to 68, 70 to 67 on the Aprils, with those going off in the next couple weeks. The deferreds were sold off a little bit, though. Nothing really to talk about out of the hog and pig report. Came in as pretty much neutral. As far as the cattle are concerned, I think what we ran into is an end of quarter situation where funds were long about 40,000 cattle and they needed to liquidate out of some of those books and profits, and they did, and that's brought cattle back down to some lower areas, lower than where cash supposedly would be trading. Boxes have been down this week. Actually, this afternoon, Select was down over $3. So those boxes are collapsing somewhat, and we really haven't seen any kind of cash cattle trade here. I think one thing to keep in mind is there's a lot of contract cattle out there, and those will start showing up in this next month. So as long as we stay in the Junes below our 50-day moving average, it's going to be tough to see April prices in June for right now, I think. Bottom side, I think June probably gets down below that 120 level at some time, especially if we continue to see these boxes fall out of bed and April follow suit. Over in the ag markets, we had our quarterly stocks report yesterday. Basically, in that quarterly stocks report, we saw 93.6 million acres were going to go to corn. That was the big game changer out of that report. People had put it at 90 million acres. Now, remember, this survey is done in February before March, and for the month of March, corn prices were down 8 cents and bean prices were up 50 cents, so I don't put a whole lot of credits in it. You're probably going to see some acres come over. The most acres that have been switched over from this March report has been, I think, 1.8 million acres. So, okay, let's put that into the equation. You're still talking around 92 million acres, which is well above the 90 million coming in here. So funds added to their shorts on Thursday. Today we saw a little bit of a bounce. We ended in the green. I think that's first day of the month. That's April 1st. You've got a little bit of money being put to use. And usually that flows in 3 days. So we'll see if that actually comes about or not. On the bean side of things, the acreage there was at 82.2. R.J. O'Brien's analyst, Randy, was spot on with that. That's the number he was thinking of, so it wasn't a surprise to anyone. It was a little bit less. Typically what you see out of this report is the traders estimate a higher number, government comes in with a lower number. By June, the government's lower number comes back up to where the traders were expecting, or if not higher. So you look at more bean acres out there, and like I said, being down 8 cents in corn, being up 50 cents in beans, I think we've already started to buy some of those bean acres. With that, we saw beans rally yesterday and rallied again today, making some new highs for the move. Once again, I think we had a little bit of money flow in there. Charts look good on beans, but I have to say what I said about both the equity markets and the energy markets, that fundamentals are pointing towards down prices. The charts look good, so we'll see how far those charts can sustain the bullish run there. Fundamentals are negative. I've got basis falling at the river for beans. I've got basis down at the Gulf at the lowest level it's been in 5 years. So we're not attracting new business over here, even with higher numbers coming out of Brazil. The thing that people kind of miss, I guess, too, is that, all right, we're seeing a rally based on fewer acres. We know that those acres will probably increase. So it's probably a good level to start maybe looking at hedging up some bushels that you're going to have this year. Remember, South America has 6 billion bushels that they're going to have to get onto the market. We only have 3.5. We're not the leader in beans anymore. So you got to keep that in check, I guess. As far as that new crop beans, I'd be looking at option strategies, just because it is a chart-based rally. That gives you a little more wiggle room. When the charts start to roll over maybe a little bit, then maybe look to improve on those options a little bit. But something to look at down the road. Wheat, on the other hand, we saw our lows, came back a little bit. Lower wheat acres, you're looking at corn. Dakotas are going to be planting corn instead of wheat, or so that's what they say right now. We'll see how that all pans out. Still have an abundance of wheat, and when everybody talks about burdensome stocks, well, burdensome stocks, yes, we've got a lot of it, but we're not seeing prices drop down to where that demand picks up so that we can get rid of them. So the higher we stay at these prices, the longer these stocks are going to stay with us, and the less ability we will have to have that real big run up. You know, you look at corn and beans, and during the summer months, you usually have a 50-cent run in corn, dollar run in beans. This year, maybe it can be a little bit against that because we do have those overstocks. So that is about it for the last week of the quarter, first quarter, last week of March. This is Brad Dennis with BIS Commodities, and if you have any questions about these things, give us a call here in the office, 1-800-373-2525. End of broadcast.